something move forward. Now, the devil is very much in the details about who will be taxed, what the scope of the tax is, which cities will be chosen, the tax rates. But this signals that they're willing to endure. It's the latest signal, and we've seen this all year, really, with whether it's the regulatory crackdown on tech or other measures. We've seen that they're willing to endure short-term pain in order to solve some of these structural problems. And so from that perspective, I think it's positive, even though this is going to be very cautious. It could be 2026 before the tax is fully in place.
Yeah, so what does it tell you? They said you might have to wait 5 years, right, for maybe any kind of substantial nationwide property tax, Gabriel. Does that signal to you that maybe the government is not that determined to wean the economy off of real estate investment and the property sector overall? What does it tell you about the business model moving forward, or the growth strategy, the growth model, I should say?
Well, as always with China economic reform, it's 2 steps forward, 1 step back, because there's so many stakeholders that stand to lose from this tax. That's why it's been stalled for so long. And we know there was a lot of wrangling behind the scenes about who to start out with. So, Xi is not all powerful. He can't just steamroll all opposition, but we're seeing him accomplish something here that previous leaders failed to do. And, we're going to see a nationwide property tax eventually is my forecast.
Fantasia that actually had the cash to pay their creditors, but they decided to default anyways, which surprised the market overall. And we talked to our Bloomberg opinion columnist, Julie read about it. It's like these property developers are lying flat. Why do you think they're doing that? And in a way, what kind of repercussions would that have for the sector overall?
Well, to a certain extent, there's a kind of game of chicken going on between developers and the government. So often in the past, we've seen the government kind of flinch at the last minute. When distress really started to loom in the property market, they eased up and they resumed the flow of credit. And there's an attempt right now to deal with moral hazard. And I mean, to some extent, we could see these actions by Fantasia as an attempt to pressure the government to go back to that old playbook. But the judgment is that the economy can endure this. I mean, if you look at housing sales for the entire year are still pretty strong because it just started crashing over the summer. But on a 12-month rolling basis, they're still pretty strong. So the government is, and the same with local government financing, it hasn't fallen off a cliff yet. And so the government feels like it can hold on long enough and that isolated defaults aren't going to cause a major contagion.
How significant is that they can make this dollar bond payment? And what does it tell you in terms of what it means for offshore investors?
Well, it's certainly good news in the short term, and it shows that they're trying to minimize the damage on offshore investors. In the medium term, I still think we're likely to see some losses on the offshore bonds, but I do believe that authorities in China will seek to minimize the damage on offshore creditors relative to onshore creditors, for the reason that post-default, Chinese property developers still need access to that market, and offshore investors are not subject to the kind of strong arming to continue the flow of credit to developers that onshore creditors will be subject to. So therefore, they need to be treated with a relatively light hand if they're going to keep funding these developers in that market.
The other part to this, and you touched on this already a little bit, Gabriel, is that if they need the money, they can actually find a way to come up with the money, whether that's them or somebody else.
Well, that's exactly right. The key thing to understand about what's happening both with Evergrande and other Chinese developers is that this is not just the business cycle at work. This is a policy-induced slump in China's housing market. And that means that policymakers could reverse the slump anytime they want to. So far, they're choosing not to. And we saw that with the recent credit data for September, where they're really holding the line on mortgages and on developer loans, even though the easy thing to do in the short term right now would be to reverse course, as they've done so many times in the past. But they're not ready to do that yet. And I don't think major easing is going to come until early next year.
To your point on the policy exercise, the big news over the weekend is China looking to expand now the property tax trials to several other areas of the country. I mean, it's a bit strange and odd, but doesn't that actually then exude confidence that they are confident the system will hold up amidst all of these things that you already outlined there for us?
I think it does signal that. This is a very significant reform. This is an initiative that's been talked about, but where we've seen no significant progress for at least a decade. And we're finally seeing something move forward. Now, the devil is very much in the details about who will be taxed, what the scope of the tax is, which cities will be chosen, the tax rates. But this signals that they're willing to endure. It's the latest signal, and we've seen this all year, really, with whether it's the regulatory crackdown on tech or other measures. We've seen that they're willing to endure short-term pain in order to solve some of these structural problems. And so from that perspective, I think it's positive, even though this is going to be very cautious. It could be 2026 before the tax is fully in place.
Yeah, so what does it tell you? They said you might have to wait 5 years, right, for maybe any kind of substantial nationwide property tax, Gabriel. Does that signal to you that maybe the government is not that determined to wean the economy off of real estate investment and the property sector overall? What does it tell you about the business model moving forward, or the growth strategy, the growth model, I should say?
Well, as always with China economic reform, it's 2 steps forward, 1 step back, because there's so many stakeholders that stand to lose from this tax. That's why it's been stalled for so long. And we know there was a lot of wrangling behind the scenes about how big this was going to be to start out with. So, Xi is not all powerful. He can't just steamroll all opposition, but we're seeing him accomplish something here that previous leaders failed to do. And, we're going to see a nationwide property tax eventually is my forecast.
We were talking about, companies like Fantasia that actually had the cash to pay their creditors, but they decided to default anyways, which surprised the market overall. And we talked to our Bloomberg opinion columnist, Julie read about it. It's like these property developers are lying flat. Why do you think they're doing that? And in a way, what could that have for the sector overall?
Well, to a certain extent, there's a kind of game of chicken going on between developers and the government. So often in the past, we've seen the government kind of flinch at the last minute. When distress really started to loom in the property market, they eased up and they resumed the flow of credit. And there's an attempt right now to deal with moral hazard. And I mean, to some extent, we could see these actions by Fantasia as an attempt to pressure the government to go back to that old playbook. But the judgment is that the economy can endure this. I mean, if you look at housing sales for the entire year are still pretty strong because it just started crashing over the summer, but on a 12-month rolling basis, they're still pretty strong. So the government is, and the same with local government financing, it hasn't fallen off a cliff yet. And so the government feels like it can hold on long enough and that isolated defaults aren't going to cause a major contagion.
How significant is that they can make this dollar bond payment? And what does it tell you in terms of what it means for offshore investors?
Well, it's certainly good news in the short term, and it shows that they're trying to minimize the damage on offshore investors. In the medium term, I still think we're likely to see some losses on the offshore bonds, but I do believe that authorities in China will seek to minimize the damage on offshore creditors relative to onshore creditors.
I think that's right. I think there's a lot of concern to bail out Evergrande in some form or fashion, that would be advocating the sort of borrowing and the sort of debt buildup that has underpinned the problems at that company. And so this is just another sign of how the regulators are going to push for any solution other than that, is if they can get it. The chairman Hui, he, according to the Bloomberg Billionaires Index, is worth about just shy of $8 billion at the moment. Most of that money coming from the dividends he's collected from Evergrande. He does have a controlling stake in the company. He's collected about $8 billion over the last decade in terms of dividends. Obviously, we don't know how he's invested that money or how he's used it, but as we can tell, he's worth about $7.8 billion. That's probably not going to be enough for the company completely. Evergrande obviously has liabilities of about $300 billion at this point.
This, in a way, fits in with common prosperity, redistribution of wealth, right? If you make a CEO, a founder, responsible for the debt of their own company.
It does, and I think it also speaks to the idea of personal liability, personal responsibility for what the company has done. I think it would be politically hard to digest for Beijing to use taxpayer money to bail out this company at this point. And I think, obviously, we talked about the reasons why they wouldn't want to, but with the Party Congress coming up at the end of next year, it's another reason why Beijing is going to try to stay hands-off.
How much of a role will these taxes actually be able to play in narrowing China's wealth gap?
We're waiting to find out. Top government officials have for years been talking about different kinds of taxes that they think would help create more equality: property tax, runaway housing markets, or an inheritance tax, which could interrupt, general wealth transfer, especially in recent years when when the people at the top of China's wealth when the number of those people have really exploded. But Beijing hasn't been able to do much on those fronts.
So it's interesting, right, why this hasn't been done previously, because we think about what the Chinese government's policy-making ability is to be able to act top-down very quickly and efficiently. So why hasn't that happened before?
Yeah, I find it really interesting, too, when it comes to things like quashing the political protests in Hong Kong or responding to you, move very, very, very quickly. Taxes are harder. They're just as unpopular in China as they are anywhere else. And even though there's no official political opposition to the Communist Party, the leaders still need public support.
And Beijing just announced a series of property tax pilots on Friday. Is that progress?
I would say it's a compromise. It's a half step. China's been talking about a national property tax for almost 20 years. But there's a ton of opposition because governments get a lot of their revenue from land sales, and urban Chinese have about 70% of their assets tied up in real estate. So both groups are really protective of property values, and there's a fear that any kind of excessive property tax would really crater the market. So the government announced it would initiate a series of local pilot programs. It hasn't said how many or where they'll be. Beijing still wants a national levy, but it's just going to have to wait.
9 a.m. in Beijing and Shanghai. Welcome to Bloomberg Markets China Open. I'm Yvonne Mann.
Good morning, and I'm David Ingles, just counting down to the open of trade on the Chinese mainland and here in Hong Kong. Let's get to your top stories. Today, Washington dialing up tensions with Beijing, banning China Telecom from the U.S. market.
Evergrande's founder is told to dig into his own pockets as the government pushes the developer to privatize homeowners over bondholders.
And China releasing its much-awaited climate roadmap, outlining ambitious plans to cap emissions by 2030.
Yeah, before we count down to COP26, Dave, you know, there's a lot to talk about when it comes to Evergrande, not just when it comes to our sources telling the billionaire has to kind of use his own wealth to pay off some of this debt, but also we heard some kind of directives from regulators saying, look, you got to start prioritizing some of these offshore creditors as well.
Yeah, make active preparations, I think, was the language used there to many firms, I think, was out of the NDRC. There's also obviously China Telecom, and again, we're talking about tensions between Washington and Beijing. We'll see what market reaction is going to be like. And we also got about 30 minutes back inflation, reminding us in Australia that it is still front and center with a 3-year yield now, in fact, within your sort of intervention territory where we were, I think, a few days ago here with the RBA. We're talking about an April 2024 bond. There we go. 96, by the way, is the generic yield there as far as that is concerned. Have a look at equity markets. So it's certainly caution that's dominating sentiment at this point in time. Although U.S. futures are still managed. Of course, we're now down about 1 1/4, 1 point there. Bond markets, we're looking at this, and also your 2s and your 10s and your break-evens hitting what, at least 15-year highs all the way up to your 10-year break even. Commodity markets, Apple futures, here we go again. We're lower, though, today with thermal coal also still very much in focus, down a further 10%. And the approach to the open, 27, 28 minutes away. There we go. We're looking at futures pointing down. Some strength still coming through in the Chinese currency. Right. Let's get you the latest here on Evergrande here, with authorities, as Yvonne is pointing out, they're basically telling the founder, Hui Kai-yen, to use some of his own cash to help the company meet its debt obligations. This, as regulators have also been asking other firms to start preparing, set aside some cash for offshore bond payments. Stephen Engel, our chief North Asia correspondent, has the latest for us. Steve, I mean, surely he's a rich guy, but he probably doesn't have enough money to meet all of these obligations. What is that message they're sending?
Yeah, he's not as rich as he was a few years ago on the Bloomberg Billionaires Index. He was worth an estimated. Again, these numbers can be a little bit in the gray area in China, of course, because of all the cross ownerships and kind of hidden wealth. But estimated at $42 billion was his personal wealth back in 2017. That has now dwindled, obviously coinciding with Evergrande's problems, down to about $7.5 million. But again, you have to take some of these numbers with a grain of salt. I can almost guarantee you he doesn't have Elon Musk type bank account. He doesn't have the amount of money to cover the more than $300 billion in obligations and liabilities that Evergrande has amassed. But again, it's a strong signal from Beijing. We're not going to bail you out. You got some cash. You need to start prioritizing that. It's an interesting time, obviously, because Evergrande kind of surprised many China watchers last week when it did manage to pay that 30-day grace period expiring coupon on that dollar bond of what, $83.5 million. But you know what? This is a company that has more, dollar bonds coupons due this Friday, another $45 million, and then another $150 million coupon coming due on November 11th. That 30-day grace period expires then. And then on top of that, more than $7 billion in bond payments due in 2022. So he's going to have to dig deep in those pockets. But again, we're also hearing from people familiar with the situation that local governments all across China are monitoring Evergrande's company cash in bank accounts to make sure that they pay homeowners and wealth management product holders before necessarily paying off creditors. So a bunch of mixed signals coming here from authorities, and they got to dig deep, I guess, if they want to survive.
Yeah, and this regulatory comments that we got from the NDRC about get prepared to start paying off some of these offshore creditors. I mean, at first, people were thinking that the pecking order was going to be domestic creditors, and then it's some of the people that are waiting for their apartments to be built as well. It seems like things are changing a little bit, Steve.
Right. Yeah, and that's part of what I was just alluding to, these mixed messages coming from authorities. You know, on the local level, they've been told that they need to make sure that the short-term projects that homeowners who have not received, well, 1.6 million people have paid down payments, have not received their homes, and the homes have not restarted construction, and then the contractors have not been paid, and suppliers have not been paid. You got to do that first. But then now the NDRC, the National Development and Reform Commission, top planning body in China, is saying, look, you need to make active preparations. All you highly indebted developers and other companies, you need to make active preparations to pay your offshore bonds. So where are the priorities? Obviously, financing costs have improved, exacerbated at these lower rated developers. They're having trouble raising that kind of money to meet all those obligations. And you have more defaults. You have Fantasia defaulting, Cynic defaulting, Modern Land, the latest, not to pay their obligations. They haven't necessarily defaulted yet, but it's a growing list.
Stephen Engel, our chief North Asia correspondent there in Hong Kong. Let's get to our next guest. He says that investors are still being complacent about the risks from the Chinese property sector and its regulatory crackdowns. Joining us is Mohammed Ababai, city head of APAC Trading Strategies, here in our studio. What do you think investors are missing, though, when it comes to the property market?
I think overseas in particular, there's a lot of misunderstanding about what is actually going on in China. We held a conference call on, I think it was sometime in mid-September, and we had something like 9,000 clients dialing into that call. It was a city record, and it was held at 8 p.m. on a Friday night. And
long day for you.
It was a very long day, and then the conference call started, going on until after midnight for the next 2 weeks.
And what were they asking you?
Really, there was a lot of questions about, is this the Lehman moment for China? And our conclusion at the end of it was, no, it's not the Lehman moment, but we're watching it, and we did a lot of work on it, and we built a framework around how we can estimate whether it's systemic or not, and whether it's going to become a lot more global. Now, even overnight, what we've heard in the press is that apparently US and Chinese government negotiators were meeting, and this was being talked about as an issue. But certainly in the market, the stress peaked on around September 2021. And then by last week, we were looking at this, and the stress had completely disappeared. So if I give you some numbers, on September 20th, it was something like 8.9% probability. By earlier this week, it had fallen to 1.1%. So that's back to the level that you were at before this Evergrande story blew up.
Mo, the big picture, though, it doesn't seem that at least the policymakers in the capital, Beijing, are perturbed really with what's going on. Otherwise, you'd see them relax, I would imagine, monetary policy to sort of ring fence the damage here. And as far as markets go, it seems that policy might be just too tight, still, at least.
Well, certainly that is a concern, and what we're hearing from Beijing is that they're very worried about the PPI. The CPI is really low, but of course they're looking at the forward indicators, and policymakers in Beijing really do believe that they can control the property market, that it will be okay. I mean, from a market's perspective, what we're seeing is a couple of interesting things. The first is that even companies that seem to be able to make coupon payments are deciding not to make them. They're basically saying, they'd prefer to keep the cash for themselves. The second thing is that even companies which are solvent could be facing liquidity problems if property transactions dry up. So there's two issues here, really. One is solvency, the other is liquidity. And what we're actually seeing is that we've chopped up the China property sector into 5 tiers, and we're finding even companies in the second best tier are seeing their yields really starting to rise.
Mo, all right, hold the thought. You guys have put out a report, 4888 on the S&P 500. I'm believing that's easy, of course, for our viewers. We'll talk more about that a bit later on. In the meantime, in Australia, here we go. CPI core inflation beating estimates. The 3-year yields is roughly at about 1% for the first time in about 2 years. Specifically, at least a little bit more granular here, is the April 2024 bond. The bond yield there is actually now back at levels that preceded intervention a couple of days ago from the RBA, so I guess just watch this very, very closely. On Australia, in fact, Paul Allen, he's been waiting. He's in Sydney. He has your first word news. Paul, go.
Thanks, David. The US has revoked China Telecom's permission to operate in the country. The FCC voted to cancel the company's licenses, saying its ownership raises significant national security and law enforcement risks. The Commission pledged more steps to purge the US market of Chinese technology in the name of security. The FCC says it's also fast-tracking security reviews of China Unicom and Comnet. President Biden has pledged to provide Southeast Asia with more than $100 million in funding to fight the pandemic and tackle the climate crisis. Biden made the announcement at a virtual meeting of ASEAN leaders where he sought to bolster ties with the region. It's the first time since 2017 that a US president has taken part in the bloc's meeting. UBS is pushing back against concerns about China's growth amid plans to keep spending there. The Swiss lender's profit jumped on the back of wealth management fees and investment bank returns. However, its Asian wealth business saw almost $2 billion in outflows, with Chinese clients turning cautious and deleveraging. CEO Ralph Hamers told us he's still optimistic about UBS's business in China.
I'm strategically football in China. Absolutely. Who can't be, right? We know the country very well. We're very successful in the country, both in the onshore business and the offshore business. We have a very good combination of businesses in the wealth, IB, and asset management business, and we plan to invest more.
Singapore is opening travel lanes to Australia and Switzerland. Starting on November the 8th, fully vaccinated people arriving from the two countries won't have to quarantine as the city-state takes another step towards reopening. Singapore recently opened travel lanes with 10 other countries, including the US, the UK and Germany. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Well, still ahead, dual circulation, common prosperity, and Chinese regulation. We're going to discuss top conviction calls with Grow Investment Group's William Ma later on this hour.
Also coming up here, Washington banning China Telecom, escalating tensions yet again with Beijing. More on that ahead, as well as a recap of a lot of these big earnings coming out of the U.S. Just under 18 minutes away, the opening bell, of course, Shanghai, Shenzhen, and here in Hong Kong. This is Bloomberg Markets China Open.
You're watching Bloomberg Markets China Open, just a few minutes away from the open of trade in the Chinese mainland and Hong Kong. As Dave, as we mentioned, we're tracking yields picking up once again in Australia, coming back in a big way. We're seeing the 3-year yield jumping in double digits now after that core CPI did beat estimates and back within that target range of the RBA. The bond market seems to be trying to fight what Phil Lowe has said from the RBA about no rate hikes until 2024 right now. And you're seeing that very much in the short end.
Yeah, absolutely. There we go. Not a 20. We're also looking at a break even, your 10-year break even this time. So the 2s and the 5s made news this week, but the 10-year is now the highest since 2006. So these inflation expectations are really starting to move up, particularly when you look at a longer end. Mo Appleby is still with us, city head of Asia Pacific Trading Strategies. Mo, if everyone's freaking out about inflation, why is the VIX so low?
Well, I think that they're different markets, and I think at the moment what the equity market is being driven by is continued central bank liquidity. That continues to be very clear. I do feel that sometimes the market gets a little bit ahead of itself on inflationary expectations. Remember, we have been here before in the last 12 years where the market has become very concerned about inflation, especially at the tail end of central bank liquidity provision. That just tells you that the policy has worked. The question really is what happens when that liquidity gets taken away and the tide goes out. So I think I'd actually be receiving on some of these inflation numbers that we're seeing at the moment.
Okay, well, that takes us into your special report for 2022, this liquidity framework changing. What's the elevator pitch here, Mo?
Well, I think the thing is that it's very clear that the story that we've had since March 2020 is now changing. And we've been predominantly bullish since March 2020, setting out targets. What we've argued is that the markets are going to be following the central bank liquidity very closely, and that has worked, with the exception of China and China-related markets. And what that tells you is that the market follows this very prescribed path. And even the level that we targeted for September, we said that about sort of 6 to 8 weeks before. And on the day, it actually was at that level on September the 30th. Now, what we're saying is that we can't justify a level on the S&P, for example, above the 4,888 level. And the 4,888, of course, in the West is an angel number, so you can look up what that means. And in the East, of course, it means the end of wealthier, wealthier, wealthier. So hopefully that'll be a number that everybody remembers. And when we get there, we'll probably be turning properly bearish for the first time since March 2020.
So how do you time the end of this rally, Mo? And how deep of a correction are we going to see?
Well, I think you can either be very sure of the timing or you can be sure of the level. And on this occasion, we're actually more sure of the level than we are of the timing. So, for example, if we jumped up 10% today, I'd turn bearish today, which I don't think is going to happen. But I think that my view at the moment is that we'll probably hit that high late January, maybe early February would be my early estimate. We'll probably hover and rotate for the next 2 months. And then the second quarter, especially around May, people really do, I think, want to sell and go away next year. I think it's going to be a lot tougher in terms of trading than it has been this year. But before we get there, we've still got another sort of 7 or 8% upside. In India, we've got maybe up to 10% upside.
Is that looking toppish in any way, the Indian market?
The Indian market has been looking toppish for a while, but it's the S&P of Asia. It's going to continue moving. I think the China block is really where we are concerned about what's happening.
It's the S&P of Asia. I think that's the first time I've heard that.
I have too, yeah.
I would be loved by the Indian office.
All right, that's the pitch. Mo, great stuff. Thank you so much. As always, great insights. Mo Apabai, the city head of Asia Pacific Trading Strategies there. All right, the fix for today is out here, 638.56 against the U.S. dollar, roughly in line here with estimates. Yvonne.
Yep. Taking a look at that when it comes to the question of the day, of course, it's back to the geopolitics as well as we talked about the FCC, that move to basically revoke China Telecom's license. What does this mean for the likes of China Unicom and other tech companies as well? The national security concerns, once again, are reverberating. And how is this going to affect assets, right? That's the big question of the day here today. We're going to talk a bit more about that ban coming up. This is Bloomberg.
IBKR provides clients from over 200 countries and territories.
All right, just some lines crossing here from the PBOC, Dave, when it comes to liquidity injections. Once again, injecting a net 100 billion renminbi in open market operations here today. NatWest came up with an interesting note, though, talking a little bit more about how long these are going to last, because maybe by November, that's when they're going to start to be done with at least people that are demanding cash when it comes to this local bond issuance, and those things might start to be waning soon. So look out for that. Stock to watch, we're watching out for in the open as well. We're taking a look at when it comes to the tech shares. Property very much in focus given the Evergrande story here, and our sources telling us the billionaire Hui Kai-yen is going to have to pay up some way with his own wealth here. Also, that note from the NDRC telling these property developers that they may need to start prioritizing their offshore creditors as well. Take a look at telecom. That's the one story there with the FCC move. We're watching the tech moves. The ADRs plummeted or fell quite a bit yesterday. Alibaba, Tencent lower by 2% in the pre-market as well, given the
issues, including the coronavirus, cyber espionage, and computer chips. Analysts we spoke to believe that this move shows that the U.S. may take further actions against more Chinese companies going forward. And also, the sanctions started in the Trump era, but this action taken by the FCC shows that the Biden administration is unlikely to alter course when it comes to China and the risks posed by its technology companies.
Yeah, it doesn't even matter who the president is. It seems like there is very much a clear focus on trying to rein in these companies. How will it impact China Telecom, though? Their business in the U.S. not too great, though. Not too bad, I should say, or big, I should say.
Right. So China Telecom is, China's second largest mobile carrier. It doesn't have that much of operations in the U.S. Its businesses in the U.S. mainly involves providing internet services to Chinese companies based in the U.S. Its CEO said last year that the U.S. businesses' contribution to its overall revenue would be small, even though he didn't elaborate further. So the impact would be limited. But China Telecom has also told us that they will pursue all available options to follow this matter up, and they're pretty disappointed with the FCC decision.
Shirley Zhao. Thank you there. Let's do a quick check of latest business flash headlines. Google's parent, Alphabet, reported quarterly sales that topped estimates, but YouTube and cloud computing divisions disappointed. The company's ad revenue rose 43% in the last quarter, but its CFO, Ruth Porat, flagged that Apple's privacy tracking change had a modest impact on YouTube ads. She also expects some supply chain challenges as it rolls out the new Pixel 6 series of smartphones. Microsoft's cloud computing business helped it top earnings estimates for an 11th straight quarter. Revenue for the last quarter climbed 22% as the company managed to line up a steady stream of deals for its Azure software. But its Xbox business has particularly been held back by chip supply chain snags, which expects to persist into next year. And more tech earnings ahead. eBay today. We have Amazon on Thursday as well, Dave.
Your delivery is on the way, also on the way, just under 4 minutes away from the open of markets in Hong Kong and up on the mainland. The PBOC in again with a net injection, 100 billion, and there we go. We're looking at overnight funding costs, and we're pretty much trading at the low end of that 8-month range here on the back of all these injections coming through the agenda. Earnings, auctions, and some data. Industrial profits are due out in just about at the opening bell, and of course the benchmarks as we approach the open. Here we go. Roughly at about 5-6 week highs here for the benchmarks. Yet again, the 100-day moving average on MSCI China. That's in focus. Do we manage to close above that this week? Yet to be seen. The opening bell is just ahead. Stay with us. This is Bloomberg. There we go. Futures indicate the water's probably a bit murky heading into the open. Some caution really dominating the mood across these equity markets in the Asia-Pacific. S&P futures, by the way, which opened slightly higher, are now slightly lower, and we're also getting, of course, the inflation numbers, Yvonne, out of Australia. Maybe that was the trigger. When you look at that, the core CPI beating, we're also looking at some data coming through out of China quite soon.
Yep, industrial profits coming out any moment now. This coming at a time when we are seeing a lot more firms getting a little bit more positive on China as well. You had HSBC saying, look, the baby is being thrown out with the bathwater. You have the likes of Nomura also saying it's time to start rebuilding some of these underweight positions when it comes to H shares as well. So sentiment looking a little bit better, but then we have to deal with the geopolitical tensions as well, with the latest with this FCC banning or at least revoking China Telecom's license as well. So lots to look out to.
Yeah, so 10.10%, just in case we need some context here, industrial profits was the last reading. I think they're out now.
16.3%, David.
Not bad.
Yeah.
Not bad, actually. A little bit of a pickup.
Yep. Of course, you can contributing to that. We have to deal with, of course, this commodity story, also the stronger renminbi as well. So we'll have to kind of see exactly what is driving these numbers, but certainly that is a pretty good number.
It is, and we'll see what William Ma has to say about all of this. Of course, he'll be joining us in a couple of seconds here. Before we get to that, though, just a brief look across these markets here. Opening lower across the mainland benchmarks. In case you missed it, a PBOC's out yet again with a net injection, taking your three-day total to about half a trillion renminbi, that is 490, 480, if I'm not mistaken, doing my math correctly here. A quick glance across the sector movers here. The NDRC was the, as far as the statement and the news flow was concerned here, out of policymakers was the big one overnight, essentially telling firms to make some preparations for offshore bond liabilities. And we're looking at the open here in Hong Kong. Ooh, look at that, 2.6% down. That's quite a sharp move here. In Hong Kong. So the indications in your pre-markets, Tencent, Kuaishou were down substantially, so this actually should not come as any surprise. A big earnings day today. Have a look at some of these earnings coming through. EVs, batteries, you have Haidilao, which really has taken a poleaxing of late. HKX, by the way, is also coming out with earnings today. We're watching that. And, of course, China Telecom unchanged. And Evergrande, there we go, 1.5% to the downside, Yvonne.
Yeah, it's kind of like that COVID trade, right? You have more restrictions. You can't go eat hot pot. I guess that's what it is. Our next guest says he's been adding exposure to mainland Chinese markets. Let's bring in William Ma, CIO at Grow Investment Group. Yeah, so you've been taking advantage of these low valuations. But, I mean, what do you say to those that are just, I guess, are just too pessimistic about China right now? Do you think that there is just too much bad news that's being priced in?
Yeah, I think people are too pessimistic. And don't forget the China market. We are talking about quick bull and then slow cow.
Oh.
So if you miss the quick bull, basically you have to wait for 10 months. For example, like February this year, the bull market is really strong in a short market, but over a few years, actually, it's very long. I think seeing is believing. If you look at the domestic economy, the consumption is better than people expected. So actually, I think it's not too late for you to add exposure at this point.
Okay, but there's still a lot going on, whether it's the macro weakness, you have monetary policy that still remains a bit tight, and then you still have these regulatory reforms, the systemic risk when it comes to Evergrande as well. How do you factor in all those types of headwinds?
Yes, I think we are seeing so far positive, quick reaction from the Chinese government. Before that, the global market and investors are having some concern about, how quick they react to things. But I think over the last 2-3 months, you are seeing quick reaction on the coal price, on the Evergrande situation. I think that is also explaining why the first leg of the quick bull is coming back. If you look at MSCI China, it's already up 10% from the bottom about a month ago.
William, nice to see you back in Hong Kong, by the way. So my question is, I mean, your fund, obviously, your clients are a lot of these big pension funds. And I'm wondering, on this entire, and I think you and Yvonne talked about it slightly already, on this debate whether China is investable, I'm wondering what questions you're getting from your big investors as it pertains to investing in China, and how are you answering those questions?
Yes, I think one of the key questions they might have is about the domestic consumption strong. They are questioning about the common prosperity theme, which is one of the themes that we are very excited about it. And then they're worried about the consumption will slow down. And my take on this question is twofold. If you look at the common prosperity theme, my explanation is a consumption upgrade story. Actually, they forget about the rural area disposable income is faster than urban area. For example, year to September, the rural area disposable income is increased by 11.5%, but the urban areas up by about 9.5%, and the overall market is 10%. So actually, some of the early policy the Chinese government implementing are taking into effect. The second is people are worrying about monopoly being cracked down. But look at the private sector. Actually, private sector contribute 80% of the employment in China market. Why the Chinese government want to do it? They want to balance employment in the China market. That's why they crack down the monopoly, if you like.
And from a fund manager perspective, when you look at, say, the less affluent parts of China, to your point, the sort of poorer provinces, and Beijing looking to sort of balance things out, does that mean you have to also go down the scale in terms of the types or the size of stocks that you buy, from large caps, maybe you go to medium or small caps?
Yes, I think one, we are going to mid and small cap. We are also more focusing on the third and fourth tier city consumption. And David and Yvonne, you might have heard about, there are some new food IPO, if you like. One of them is called, La Tiao, which is, from my perspective, is like spicy chewing gum. So those type of, food consumption is long-term sticky consumption story. Seeing is believing. I'm traveling in China, seeing the young generation eating this, in the villages. I think those are the long-term growth. Some of my pension clients, they want to participate in the longer-term China growth story.
La Tiao.
Yeah.
That does not sound appealing at all, William. I'm just thinking of the female consumption theme that you're looking at. What do you mean in terms of female empowerment?
Yes, this is actually a big things that I'm seeing on the ground. When you look at the shopping mall, talking to people, my friend's wife, they're making all the shopping decision. So actually, a lot of domestic China brand, they call it new brand, they're targeting the female because they're making all the decision in terms of consumption.
So you're not talking just about luxury plays, you're talking
not
about
just luxury,
other consumption
household
plays.
goods. For example, the pets and everything, they're targeting to the female kind of like consumer. The second is a single person. Yvonne, you might not be a single person, but a lot of my friends are single person in China. The consumption pattern is quite different. They might not go to the restaurant. They buy a hot pot, self-steamed hot pot, and then at the home and then eat it.
Oh yeah, I do that.
The earnings growth are 50% plus. I think those are the growth story in the tier 4, tier 3 cities consumption story that is ignored by the global investor.
All right, we're giving out a little bit too much information on Yvonne. You're not single, your hot pot and your takeaway eating habits. William, the question, I guess, then is the longer-term consumption story, based on what you've said, seems to be intact. The question, and we were just talking with Citi earlier, Mo Apabay, and he said, in the meantime, though, they're avoiding China because the slowdown in the economy is probably not priced into these markets yet. But how would you address that?
Yes, I think consumption is part of the dual circulation common policy, but at the same time, actually, some market participants, including myself, is expecting more physical and monetary supporting stimulus. So I believe the catalyst for the fast boom, if you like, in Q4, if not early next year, will be some local government or sector-specific positive kind of like policy stimulus, but it's not a flooding.
It's not a triple R cut, you're saying?
It's not a triple R cut, but it would be sector-specific. For example, tax benefit. For example, the bank will extend loan to certain sectors. Those would be catalysts for the domestic fund manager to increase exposure. Last point on this, a lot of liquidity in the system. The mutual fund, they are actually having 80% exposure. And David, do you expect the largest domestic sector ETF fund in the white liquor is bigger than the global China mutual fund now?
Now you're going personal with Dave and asking about liquor.
Well, when are we going to go for beers? Well, that's the next question before you head back to Shanghai. Okay, final question for you. What are you avoiding for now?
I'm avoiding sector policy-specific, sensitive sector. For example, some of the financial sector, I think there will be more regulations because that is the last sector that they haven't fully implemented. But other than that, we are very positive on the consumption.
William, it was great to see you in Hong Kong. I know you're going to be back in the mainland soon, so we'll try and get that beverage before you go. If not, when you're back, William, CIO at Grow.
We'll have some hot pot.
Investment Group there. All right, Paul Allen, he's in Sydney. He has your first word news. Paul.
The U.S. Secretary of State Antony Blinken has called for a greater role for Taiwan in the United Nations. Blinken made an appeal to other countries saying they should back Taiwan's participation in UN agencies such as the WHO, adding that the island's exclusion undermines the UN's work. In an editorial response, China's state-run Global Times said the U.S. was, quote, upgrading its efforts to separate China and Taiwan, saying Beijing wouldn't back down on the issue. Chinese authorities have told Evergrande's billionaire founder, Hui Kai-yan, to use his personal wealth to alleviate the group's debt crisis. Sources say Beijing's directive came after Evergrande missed an initial September 23 deadline for a dollar bond coupon payment. We're also told local governments are ensuring company cash is used to complete unfinished housing projects and not diverted to pay creditors. China has released its official roadmap for capping carbon emissions before 2030, just days before the COP26 climate go. A plan from the State Council, China's cabinet, provides some detail on how Beijing hopes to deliver on its promise of being carbon neutral by 2060. It offers new plans for sectors ranging from hydropower to construction and oil refining. 3 key US senators have released legislation that would require companies reporting more than $1 billion in profits to pay a minimum 15% tax rate. The proposal is sponsored by Senate Finance Committee Chairman Ron Wyden and Senators Elizabeth Warren and Angus King. They say it would raise $300 to $400 billion over 10 years as an alternative to increasing the regular corporate income tax rate from 21%. The chairman of the US Senate Banking Committee says his panel will probably hold hearings on stock trading by top Fed officials. The central bank has limited active trading of stocks and bonds after a scandal that led 2 senior officials to resign. Senator Sherrod Brown told us that legislation is probably needed to enforce those bans.
These are 7 very influential people. They shouldn't be spending their time day trading, not to mention the conflicts of interest it presents and the appearance of conflicts of interest. And 2 Fed presidents have resigned, as they should have. I think we need to know more, and I'm working on legislation as I have been putting together for some time.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Well, coming up, we preview Hong Kong Exchange's results and gauge whether profits will continue to decline as companies delay their IPO plans. This is Bloomberg.
As we watch Carol slowly change color, seems like a great time to talk trading. Because it's as true with the markets as it is with anything. If you want to do big things, you need better tools. Trade up to IC Markets.
We're in earnings watch here in Hong Kong with the exchange operator. HKX is poised to report in a couple of hours here, second straight quarterly profit decline. That's what we are expecting, at least here, with amidst this regulatory overhaul, of course, that's continuing to affect the city's IPO pipeline, Yvonne.
Yeah, a bit of a dry spell there right now. Here with more analysis is Bloomberg Intelligence's Sharni Wong, senior industry analyst for brokers and exchanges. So what are we expecting for the third quarter, Sharni?
We're expecting profit to drop slightly, especially from last year because it was very strong. We think the cash equities segment, that should be pretty strong because turnover was up about 17%. The stock connect flows were also really strong, but then nearly all of that will be offset by a drop in the derivatives segment. Yeah, so overall pretty much flat. And then also investment gains is one to watch as well because the consensus is pretty spread for that one.
But they just have some good news when it comes to MSCI and their A50 futures derivatives product as well. In terms of contribution, in terms of the top line, what are you expecting there?
So at least for the first 6 months, it would be nothing because they're not charging any fees. But when we look longer term to the second half of 2022, we think that's when it's going to start contributing. Having said that, unless they get about 50% a share of the offshore percent of their earnings.
Best case is not really best case, isn't it? Let's talk about the IPO pipeline, because that has been one of the main drivers of at least business over the last, 18 months or so. What's that looking like?
So third quarter, it was going to be, it was pretty weak. And then when we look out to the fourth quarter, it's going to get even tougher, especially compared to last year, because the fourth quarter last year was a record high. So unless we get some clarity, from the regulators in China on the offshore listing rules, and also whether, companies that list in Hong Kong, whether they're going to be subject to that cybersecurity review, we don't think that the IPO pipeline will pick up anytime soon. But then longer term, a lot of US listed Chinese companies, they could still come back. So longer term, the outlook for Hong Kong Exchange should still be strong.
And as the offshore exchange, if you will, of I guess part and parcel to this opening up of the mainland, how do you see that benefiting the HKX longer term?
So I think it's definitely positives for the Wealth Connect, which just launched. That one is more about the demand for mutual funds, but then it does flow through, to the demand for underlying assets, in particular equities, which would benefit Hong Kong Exchange. Also, they just launched the Southbound Bond Connect. When we look out in future, we do anticipate other programs like the ETF Connect, and also eventually an IPO Connect, which would be a further positive catalyst for them.
All right, Shani Wang there from Bloomberg Intelligence on what to expect out of those Hong Kong Exchange earnings coming up today. Coming up as well, days out from the COP26 Climate Summit in Glasgow, China outlines its roadmap for capping emissions, targeting several key sectors. We have details just ahead. This is Bloomberg. All right, taking a look at markets right now, seeing some downside pressure here when it comes to the Hang Seng. We're down about 400 points or so. Tech very much dragging that lower here, given the geopolitical tensions that we've seen with the FCC moving to revoke a China Telecom's license as well. Does have implications for a lot of tech companies that plan to do business in the U.S. as well. So lots of questions about that. Also, we're talking a little bit more about COP26 as well. China has released its official roadmap for capping carbon emissions by 2030. The plan includes some new targets and mentions specific industries that will be told to act upon. We've been waiting for this for some time now, Dave.
Absolutely. So we have the document. What does that mean for their negotiators moving into, of course, that very important conference? Let's bring in our commodities reporter, Martin Ritchie. He's with us in Shanghai. And, we're also going to bring in the coal angle to this, obviously, here, Martin. Talk to us about the significance of this specific document. Let's start with that.
Yeah, so this is the second part of China's long-awaited roadmap, and it comes just days before the COP26 opens in Glasgow. And in fact, later today, China's climate envoy is meeting the EU's climate chief for preliminary discussions as things kind of gear up towards the Glasgow meeting. So the roadmap, it has a lot of some new details across lots of different industries. Transportation, 40% of all new vehicles should be electric powered. Oil refining capped at 1 billion a year by 2025, and lots of other things across industries from cement and steel to hydropower and fuels. So this is sort of China laying out its general plan before it goes to Glasgow, before it sort of nails down a lot of the details in those negotiations.
Yeah, and then you have all these details, but then you have to look at things that are not being mentioned as well. What's not in this plan, Martin?
Yeah, so I mentioned about China's climate envoy meeting with his European counterpart later today, and that's Frans Timmermans, who was actually on Bloomberg yesterday, saying he was looking for a lot more detail from China. I am not exactly sure that the detail he's looking for is certainly in this document. Yes, there are some new targets, numbers, but if you look more broadly across it, it's not a very detailed roadmap, at least from what we can see here. For example, in the steel industry, there's not really any more mention beyond of targets beyond what they've already said. It's all quite aspirational.
Martin Ritchie there with a preview really of China's role, a massive role here as it pertains to COP26. Live for us, they're out of Shanghai. And in fact, really parts of this, Yvonne, is Xi Jinping will be missing the event. Of course, the Chinese president. It seems that maybe internal politics, because we are also coming up against the 20th Party Congress that might be keeping, of course, things busy in Beijing ahead of Glasgow, or while Glasgow, of course, is going to take place in a couple of days.
Yeah, he's busy campaigning at home. So what does this mean for COP26? There's been a lot of questions about whether it matters that President Xi is there or not, and his absence. Does it mean that COP26 we're not going to achieve some good results? That's going to be the key question as well. But again, as Martin had mentioned, with this roadmap, it seems like we're still lingering with some more questions about some of these targets and exactly how they're going to implement some of these new rules here. But in the meantime, let's get you caught up with the business flash headlines. AMD giving a stronger forecast indicating market share gains, particularly in services, despite tight supply, servers, I should say. With its fourth quarter revenue forecast of $4.5 billion, the company says it's now on course for a sales gain of 65% for the whole of 2021. However, CEO Lisa Su expects to see supply chain constraints that are weighing on PC shipments continuing into the first half of next year. Texas Instruments forecast for the fourth quarter met estimates, just disappointing investors, though, who are concerned that a surge in demand for electronic components is starting to slow. The company flagged that the demand to speed up all orders have receded. With chip buyers becoming more selective, Texas Instruments is the largest maker of analog and embedded processing chips and is seen as a bellwether for electronics demand. Robinhood's third quarter revenue fell short as cryptocurrency transactions declined. Sales from crypto trading totaled $51 million and dropped from the last quarter. The company posted a net loss of $1.3 billion, driven largely by equity compensation for employees following its IPO. The latest quarter is considered a test for Robinhood, with retail trading slowing after a busy first half.
We're keeping a close eye on crypto as the regulatory landscape is increasingly uncertain. We're aiming to deliver great new crypto features for customers while being mindful of keeping our platform safe and introducing products that comply with legal and regulatory requirements. Crypto is still very early, and we're excited to be investing in our platform here.
And Twitter reporting third quarter sales and user growth in line with estimates, a sign the company's advertising business is weathering Apple's new limits on consumer data collection. The social media company said that the privacy tracking changes will only have a modest impact on sales. Unlike rivals Facebook and Snap, Twitter depends more on brand advertising, which requires less personal targeting.
Let's talk about the NBA. It's getting interesting.
And on Twitter, yeah.
Yeah, so I'm going to read the tweet, actually. This is from, of course, the Boston Celtics, a player who, of course, has been in the news. To the owner of Nike, Phil Knight, how about I book plane tickets for us and let's fly to China together and we can try and visit these, what he calls slave labor camps, and you can see it for yourselves. He's also tagging LeBron James and Michael Jordan. You guys, that's the tweet 7 hours back.
Yeah, it's interesting how, we haven't really quite seen a big response from Beijing. Yes, they did bar one of the Boston Celtics games recently, but I just think there was a kind of a line saying that his tweet on Tibet not worth refuting. So I think a year ago, if we had seen comments like this, we probably would have seen a bigger response, but it's actually quite surprising as well. But yeah, a lot of questions on what this means. But I guess China is pretty busy here domestically to deal with a lot of other fronts right now.
Yeah, and unless I'm missing it, I'm not sure if Nike has actually also responded to this. Just in case, though, this is for the public, of course. When you look at, there is a part of the Nike website where actually you do see this manufacturing map and where they have all those factories pretty much. I'm not going to show my phone. It's quite small here. But yes. Okay, let's have a look at these markets right now. 30 minutes into the session. It's a risk-off tone Equity-wise, you're also getting U.S. futures starting to point down. Not a massive move, but it's Australia, which we'll talk about on the other side of this break, which is really making the market news this morning. This is Bloomberg.